You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means it's one of, I can't say my favorite because all these shows are like my children at the end of the day. It's hard to choose just one, but Education Wednesday certainly up there in terms of my favorite days of the week. Why? Because it's time to roll out the old Options Boot Camp, what the cool kids call OBC. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which all you folks are binging and mainlining. Yes, that same network. So epic, so grandiose. Our tale in terms of content so far-reaching that it broke Spotify. Yes, this is actually a fact, listeners. They can handle Rogan. They can't handle us out there. A lot of people writing into us last week saying, man, I can't find your stuff on Spotify anymore. We went looking, the OBC feed was there. All the individual feeds were there for shows like Vol Views and stuff. If you subscribe to those individually, you were fine. But the big boy, the network feed, where most people get our content through, was not updating. Had not updated in about a week. Seemed kind of strange. So we did some digging. Our distributor on the network side did some digging behind the scenes. Turns out we were just too much for Spotify to handle. 6,000 plus episodes we were throwing at them. Remember, we've been doing this for 17 and a half years. Listen, we got some options goodness on that feed. So it was just too much for Spotify. So to compromise, there it is working again. You can get it on Spotify again, our full network. But we had to curtail it to a mere 3,000 episodes. So you can't get the full kit and caboodle on Spotify right now. Luckily for you, we do have the app. We do have the website. You can still go those places and get every episode we've ever done. From the primordial ooze days, not just of options, but of podcasting. It was very early days. No one knew what the hell in. You had to have an RSS reader to get it. It was crazy time. But yes, we did break Spotify, so we have that feather in our cap. If you want to check out the full network that broke Spotify, of course, Make sure you're listening to the full network feed. I say it all the time, but there's a reason why it's breaking Spotify. That's where all the content is. And of course, if you want to go above and beyond, you want to join us live for these shows, you want to get pro Q&As like one coming up later today, should be a banger, as well as, of course, Options Oddities at the end of the week. You want to get your name in the hat. It's coming up. Handful of days until we give away the June Pro Trading Crate. Only one place to go for all that goodness and more. Early access to the OIC content. TheOptionsInsider.com/pro is the place to go. And you know, on Education Wednesday, I'm also joined by my co-host and indeed sometimes nemesis in life. He is none other than the black-hatted one himself, Mr. Dan Passarelli III, Esquire, from Market Taker Mentoring. Mr. P, welcome back to the show, sir. How does it feel to be on the network that broke Spotify, sir?
Oh, yeah. I mean, yeah, we're always breaking shit around here, aren't we?
That's kind of what we do.
It feels great to be back. And I'm glad Spotify's not broke for us today because I am looking forward to this.
Yeah, I found out how many people listen to our show via Spotify. I mean, I always knew the numbers, but anecdotally, it's a lot because people were like, where's my show? Mr. P, you're still a little bit hungover because you're fresh back from wine country. Of course, it was the big MTM, the Big Daddy, the Grand Palooza, the big event that you do every year. Your big epic in-person forum, multi-day extravaganza. Hit us up really quickly. What was the big takeaway? What'd you guys do out there in wine country besides drink yourself stupid for 3 days?
No, I only drank myself stupid one day. We had a 3-day class. That was our retreat, which is looking like it might be the last one, actually. But we had 3 full days of workshops and had a lot of fun. We always have our dinner reception. We had a VIP event. Mark even sent in a video to talk with our folks, which was really great.
I heard anecdotally that was the highlight of the event. I'm not saying that. That's what other people told me. So I'm just relaying that.
Oh, yeah. Well, that guy was drunk, though. Yeah.
Well, it was wine country in his defense. So no more epic 3-day retreat. How am I going to get my flight on the Concorde over to California now?
Oh, well, we'll see. We'll see. You know, we might have other things in the works, but we'll see.
Are the rumors true? Are we going to the Sphere next year for the MTM event? That's what I'm hearing. Is that true?
You'll just have to wait to find out.
I will buy a ticket to that. That sounds pretty awesome. A little terrifying to see Dan on all those screens surrounding you 300 feet in the air, but also fun. And you know what else is fun, listeners? A little bit of the old options drill. So let's get to it.
In boots. Time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to the Options Drills. Going to something a little bit different today. Do you recall this, Dan? We did it a while back, all the way back on May 3rd of 2022. We did an episode called Tales from the Trading Floor, Volume 1. Dan, do you recall this epic episode, sir?
I do, kind of. Yeah, I kind of do, as a matter of fact.
So all that wine drinking hasn't driven it completely from your brain yet, listeners. You'll notice in that title, what was implied was Volume 1, that there would be more. And then, as usually happens, Dan and I got busy. We get sucked into a bunch of other options content wells, and things are going on in the market. You folks ask us awesome questions and leads us down crazy rabbit holes. So we haven't gotten back to it. It's been over 2 years since that episode, which was 184, by the way. Go encourage you to check it out if you're one of a newer listeners. And I know there's many of you all the time. We have since then touched on trading floors a few times, including episode 191 from June of that year, June 22nd, where we talked about trading floors and short squeezes and the options party continuing. And also episode 196 from July of that year. So 2022 is the year of trading floor content. I think there's so many floors being discussed in the industry, and people asking us questions, why do they still exist? What purpose do they serve? So those other episodes are more about the functionality of the floor. Episode 196 called Short Puts, Second Order Greeks, and the Golden Age of Floor Trading. But now we are back, listeners, for Tales from the Trading Floor, Volume 2. So a lot to unpack there, Dan. We could obviously do hours worth of content on this. It's a lifestyle that for the most part doesn't really exist anymore. Dan, you've been down to the modern incarnation of the SIBO trading floor. What are your thoughts? How does that compare and contrast to what you remember?
It's a little different because it's like mainly, the CBOE trading floor now is mainly one big pit. I think there's a couple other little ones in the back, and like by appointment only ones in the back, but it's kind of one big pit, mostly SPX trading there. The days when I was there, and I've been there a good handful of times by now, it was pretty subdued. But, people always tell me, oh, yeah, you should hear it when it gets loud. And I'm like, all right, does that actually ever happen? So I don't know. It's a little different. People are a lot more relaxed. We had to wear those dumb ties. You'd wear like a golf shirt and a ripped up tie. Now, like, people are down there in T-shirts.
Yeah, it's crazy. I think you're being charitable to say it's a little bit different. It is night and day different from what I've seen. You're right. People, there's no trading jackets. There's no garish ties. They're down there in jeans and like a rock band T-shirt. It's like sneakers. It's a completely different. We used to get fined if we didn't wear that stuff. But yes.
Oh, yeah.
And yes, listeners, just orders of magnitude different. What it is now, as Dan mentioned, is maybe 100 guys total. I don't think it's even that many who are in a couple of quote unquote pits separated by a little bit of distance. And it's very quiet, very subdued, very pleasant, very airy, a place you may actually want to go and do business. Now, contrast that, if you will, listeners. Go back in your memory banks, back to the time Dan and I were kind of cutting our teeth in the business, which was, at least for me, was the kind of the tail end of the go-go.com boom of the mid to late 90s. And so this was, of course, stocks were hot. It was analogous in many ways to what we're seeing right now with the meme stock palooza. Stocks were hot, and as a result, options were hot. And so getting onto the floor of the CBOE was no mean feat. Now, picture, as opposed to 50 or 100 guys in a nice, well-lit small room, picture a giant cavernous venue with thousands of people in there, all wearing a variety of different colored jackets. The sound when things got crazy was epic, something you can't really translate in the modern era. And now picture that environment. And now what you had to do, listeners, when you got down there was, people weren't just open and welcoming to you and saying, hey, young man, welcome, come to this place and good luck with your finding of fame and fortune. No, it was exactly the opposite. You had to go carve out. You had to literally take a space for yourself in these crowded pits. My first real break-in experience, which Dan was kind of going into the deep end of the pool. It wasn't really in like a tiny equity in the back of the floor. They said, no, hey kid, go break into the SPX, which at the time was kind of the big dog over there on the SIBO. VIX wasn't a tradable product yet, so there was no VIX pit. The OEX, which was the S&P 100, was the big dog back in the day, but that was dwindling, that was dying. Everyone was really moving into the S&P 500. So picture, if you will, listeners, in your mind's eye, walking into this crowd of, it was 100 plus guys at least, so probably more than the entirety of the SIBO trading floor now, just in this one pit. And all had been there for a while, all pretty seasoned for the most part, very experienced, and none of them want a new kid coming in there and taking some money out of their mouth. So you can imagine how welcoming they were. And just walking into the back of this for the first day with your sheets in hand. In terms of intimidating experiences in the civilian sector, we're not talking about first responder, you're not in the military, you're not going into battle or going into a fire. But in the civilian sector, kind of hard put to think of other things that are more intimidating than that experience. And then on top of that, you have to get in there, you have to make markets, you have to be first, you have to be right, because guarantee you, if you're the new guy trying to break in and you're wrong, guess what they're going to do? They're all going to try to pick you off. They're all going to try to take money out of your mouth. It's going to be a nasty and probably for you, a very short-lived experience. Mr. Dan, what are your earliest memories from having to break into a pit, and where did you have to break in, sir?
Oh, my God. Well, yeah, so breaking into pits, and I'll tell you the truth, Mark, I heard that it was a lot easier in SPX than it was in some of the equity pits. I'm just saying. So when I
did both, so I could compare and contrast both if you like.
Oh, yeah. Okay. Yeah. Okay. Tell me after this. So when I mean, everybody's background was different. Like there was no two traders who had the same background. I mean, mine was, I was a clerk for a long time and consequently knew how to trade by the time I got hired as a trader. So I basically got hired, studied for the membership test, took it. And then while I was studying, my risk manager, Bob, he said, hey, listen, here's how this works. Basically, the best way to think about trading as a market maker is every option contract you trade is profit because you trade them all for theoretical edge, which over time averages out and your profit is basically your theoretical edge. So the more contracts you trade, the better. So here's what you do. Go around and get the volume for every pit on the trading floor for the last 3 months. And, you could get that. They used to literally have like little bins with pieces of paper back then. This is a little bit pre-real internet, or at least internet web 2. And so I did that. And then he goes, and then find out the average and then go and count the number of people in the pit and divide total pit volume by people. And that's how many contracts you should expect to get. I guess technically you got to add one if I'm going to be one of those people, but you get the idea. So I did that and it was my first day and I was all prepared. And I was like just about to walk down to the floor. And so, my risk manager says, oh, so Dan, did you decide which pit you're going into? Which one is it? I was like, oh, yeah, I did just what you said. And I'm going into the Ford Motor Company pit. And Bob goes, oh. And I'm like, what? Yeah, I mean, that's like the highest volume per trader. He's like, yeah, those guys are a bunch of assholes. And so I'm like, uh-oh. And so, I go into the pit and, you get your chops busted for like, I got my chops busted for like a year. Like those guys were freaking relentless until I wore them down. And then, then I was in. But that was breaking into a pit. Those were the days. That stuff would not go down in today's society.
No, in our anti-bullying, very, shall we say, more genteel society. Yeah, the years of abuse, horrible abuse, every type of epithet you could think of was hurled at you, listeners. And then of course there was physical aspects on top of it. Of course you had to go in my case in the SPX, I had to go, there was no spot for me there in my firm. I had to go establish a spot. So that meant squeezing your way in between people. These were the days too, listeners, when big firms would also go out and hire, shall we say, large physically imposing fellows, maybe former D1 linemen, that kind of stuff. So they could just go out there and just physically hold a spot in the pit that no one would take from them. And whether they were good traders or not was kind of immaterial. They would use them to just establish the spot. They were almost like professional breaker-inners. And then someone else would come out later who was a better trader and take over that spot and actually make money for the firm. So what happened after I established my spot in the far back, the absolute garbage spot of SPX, was another firm decided, hey, that's a good spot. We're going to put a guy there too. So they sent one of these aforementioned D1 linemen to take my spot from me. And so what happens is a spot war, effectively. That's what they used to call it. And so that means, two large adults, you got this big guy squeezing into a space that's barely fit for one, trying to trade while all this is going on. So obviously it's a very physical, very high stress environment. That means you're not leaving. There's no lunch, there's no breaks, there's no bathroom, because if you do, that spot is taken. So, and that goes on for months, weeks, months, maybe even longer, until one of you gives up, one decides this is my spot. Or maybe what happened, used to happen in the SPX if things got really heated. There was a spot committee, actually, because the brokers ran the whole show and they didn't want to have too much violence going on around them. They wanted to have some order to the chaos. So they would decide who got to stand where. And usually that was, they decided based on who did the most volume for them and who was kind of their buddy. So yeah, that was kind of the SPX experience. And now translate that, Dan, a few years later, you're talking, 99 into 2000, multiple listing is happening. What's also happening is the .com boom is raging. So we have exchanges on the P coast that are listing a lot of these hot tech names at the time, like Sun and Dell and AOL, Microsoft, all these things. They were not listed on the CBOE. The CBOE was the big dog exchange, listeners. They didn't have all these hot tech names. It's just like today. Everyone wants hot tech. So multiple listing happened. We talked about this before on the show. The SEC said, you know what? This gentleman's agreement can no longer go on. That is collusion. Everyone has to try to trade everything. So that's what happened. Almost overnight, all these new pits became available on the SIBO. And so it was literally almost a gold rush. People, every time a new pit was opened up, let's say it was Dell, it was AOL, you would hear these stories of hundreds of guys trying to flood in there, literal fist fights and brawls breaking out for these spots, because if you got close to the big broker, that was hugely valuable versus being far in the back of the pit or away. There's a definite value to being in a certain proximity to certain individuals, shall we say. So fast forward, time comes, people are starting to really spread out into the equities. It's starting to become a gold mine. The hot days of the index are seemingly behind it. Everyone's leaving to go out into the equities. That's where the new money is. And so I decided to take my turn, Dan. I want to say it was around probably 99 or so when they actually added it. But they're adding a couple of pits, including Intel. And Intel at the time was kind of one of the big dogs, kind of like your NVIDIA today. Microsoft is another one they added. Microsoft was obviously a hot one then, still is today. And so I decided, Intel, that's where I'm going to go make my mark. So, Dan, I had the genius idea. A lot of people were doing this back at the time. It sounds absolutely absurd to say out loud now, but this is something I actually did. So after the day ended, the trading day, the day before they were going to open these new pits, including Intel, what did I do? I finish my trading, I go downstairs, and I grab a spot on the only bench. If you recall in the SIBO lobby back in the day, there was one bench. The rest of it was cold linoleum tile floor. I grabbed the one bench because guess what I was doing? I was spending the night there. I was going to make sure I was the first guy through the turnstile the next day to get my spot, to claim my spot out there in Intel. And sure enough, as the afternoon and evening wore on, more guys came in, and next thing you knew, the floor, that cold linoleum floor, was covered with guys sleeping over on the floor of the SIBO, waiting for the next morning to rush through the turnstile, rush up the escalator, and claim their spot in whatever pit they were looking for. In my case, it was Intel. I did cheat a little bit. I did have a clerk come spell me for a little bit so I could go shower and shave and maybe get some food and things. But other than that, it was about as comfortable of a night as you can imagine, Dan, sleeping over this. Luckily, I had the one quote-unquote bed, which was the one bench. Everybody else was on the did you ever do anything like that, Dan?
I got to the pit several hours early on a couple occasions with new pits. But, actually, I'll tell you what, this story, it made me think of something else. So, you talk about spots and who gets a spot. And, for those of you who don't know the background here at the CBOE, basically, like if you were close to the broker, he could see you better and hear you better. And so because the rule is whoever says sold first or buy them first, they get the trade and they get to do, if it's 100 lot, they get to do 100 if they want. A lot of times they split it up if it's an amicable pit, which, mine wasn't. But that's how it's supposed to work. But I had a stint trading in the corn options at the Chicago Board of Trade, part of the CME group. And I went over there and, all the spots were very established and they kept the pit small so that it was like there were not spots. You couldn't squeeze in between somebody. So, I would stand like in the middle, which is the furthest away from all the brokers, and, just like squeezing my shoulders together to try and be small enough to fit in a tiny space. But then when some of the guys would go to lunch, I would stand in their spots and that was okay. But it didn't really matter in the corn option pits because they didn't really care about the rules. Because like I remember several times I knew that, hey, the only way I'm going to get on a ticket is to be fast. So I was fast, and I was fast because I was already trading at the SIBO for years before that. So the guy had asked for a market, and say, okay, I'll buy him at, 5.5. I'd say sold. And I'd be standing right next to the guy, like shout in his ear, almost hit him with my hand. And like the traders next to him would like look at me and they would say sold. And the broker would give it to all the other traders except me. I'm like, what the even? It was absurd. It was completely ridiculous. But that was, That was like the Old West, but the Old West were all like the bad guys hung out, I guess. The saloon where all the people were shooting each other at the card games,
The Black Hat Saloon. Yeah, I heard some stories. I had some guys over the CME as well. They were pretty insular over there as well. I guess the closest analogy I can make listeners to, modern working life is if you went to your office, your place of business, and you went there and instead of all being your coworkers, they were kind of your opposition. And they did not want you there. So you walk into your office every day and you have 50 or 100 people there who vehemently do not want you there and will hurl invective and physically threaten you and everything else as you walk in every day. And then also there is no literal spot. There's no chair for you. You have to go take someone else's chair and then sit in it and then struggle with them to keep it while you're also trying to do your job during the day. And then forget about, getting up or going to the bathroom or everything, because then that chair is gone. Someone else will take it back from you. And doing that day in, day out for weeks, months, perhaps in a bad situation, years. Like Dan was saying, I do remember a good friend of mine running into him. We went out to had a few beverages during a break-in process for him. And I looked at him and I don't think I've ever seen a soul more broken and dejected, Dan. He had already had 5 bottles empty on the table before I even sat down. I was like, what's going on? What's wrong with you? And he proceeded to tell me the litany of abuse. I think he was trying to break into CMGI at the time. Just the litany of just horrific abuse he was taking. It was physically breaking him. He was just a broken individual. I was just like, oh my God, why do we do this? There was a reason, there was a reward, but yeah, it was a horrible process. A rewind to my story, it ended up working out for me. I did get that first spot in Intel, listeners. And of course, as Dan mentioned, there were different brokers. There were walk-in brokers that walked the floor, went to different pits and shouted out orders for different pits. They would usually come in from the back. And then there were the floor brokers, the brokers who were stationed in the pit all the time. And they had the regular order flow that you would deal with usually. They were the ones you wanted to be close to because they had the regular order flow. And if you got close to them, it was easier to get on the flow, as Dan figured out. You had to be buddies with them too. That also helped, which Dan did not have going on. So I was able to go in, and I was literally the first guy in the Intel pit. So I literally attached my handheld to the other side of the floor broker's par terminal, Dan. And I said, that's it, I am here. It wasn't easy. They sent a hockey goon to take that spot from me. That's another story for another day, perhaps. I had a lot of physical contests for my spots, Dan. It sounds like you skated by. But yeah, it was a fun time out there. Speaking of time, we are kind of already running up against it, which is crazy. Let's do one more quick one, then we'll get your question of the week. We are doing a doubleheader today, listeners, because not Dan this time. You blame me. I am the one who is traveling. Dan, you remember the old RAEs system, Retail Automated Execution System? Was that around when you were out there, sir?
Oh, yeah, right, yeah.
Well, RAEs was interesting. When all the multiple listing happened, they would use it, as the name says, to route small retail orders. And usually it was a way to get small retail orders filled back in the day when there wasn't linkage between the exchanges, and it was a much more complicated. It wasn't really an MBBO like there is today. So all these things that we take for granted really in the modern era didn't really exist back then. So retail could easily get abused in their fills. So they created this RAEs system to try to execute them at a little bit better prices and get things done without having to call them out in the pit for a 5-lot or an 8-lot. I think they went up to 20. I think that was the size limit. But Dan, they were a good thing. And I remember for a while there, people in the SPX, when the multiple listings started happening, they would put their clerks on badges and they wouldn't even trade. They would just have them get on RAEs because that's how much money there was coming in on these RAEs trades. It was a gold mine. And then what happened, Dan, is people, including our buddy, Mr. Flowmaster, Mr. Henry Schwartz on the option block, he has admitted to me that he was one of these. The RAEs bandits came along. Do you remember these guys?
Oh, yes, I do.
Yeah, they ran you over. I still have some bad memories of these. Well, listen, there's some people who were savvy on the execution front, like our buddy, Mr. Flowmaster. He probably took me for a ride a few times on some of the other side of those trades. But what happened is they would realize they would keep an eye on all these markets, and as underlying started moving, in my case, Intel, wherever Dan was trading at the time, they would see if there was, let's say, a 1-lot in the book, which is the order book. They would post orders. They would watch those orders in the book. And so as the underlying moved, maybe it got to the point where it was a deep in the money call, and maybe it wasn't really ready to be traded. You don't want to sell it as a market maker. It was kind of mid-market or whatever. They would wait for a big move in the stock, and then they would turn around and hit that 1-lot and then put the other 19 or total of 20 through to you. And so what would end up happening is they would wait for these moments and they would effectively pick you off. And up to 20 contracts doesn't sound like a lot, but remember, these are mostly 100 delta options that they're slinging in your face. So what would always happen is you stand in the pit and all of a sudden you hear some guy just swear loudly. And you turn around, what happened? He'd hold up his raise ticket they got handed. I'm sure I said a few curse words myself because now you're stuck holding the bag on up to 2,000 deltas. And the stock is inevitably never moving in your favor. It's always moving against you. So you have to scramble to hedge this 100 delta trade you just got handed. And it was always a third of a point, a half of a point, maybe a point against you, if not more. So you could easily lose thousands of dollars instantly, Dan. It was good times. You have any memories of that, Dan?
Oh, yeah. That was pretty crazy stuff. But actually, that reminds me of, do we have time for one more story?
Let's do it, sir.
This kind of combines a couple of things we're talking about. But as far as like the abuse to new traders that came into the pit, you know, a lot of the traders, they would practice on their clerks. And so I remember one of the shticks, and I don't know if you might have had to deal with this in Intel, probably not in SPX, but back then, if you were a market maker, if you wanted to short stock, like, you know, if somebody sold you calls, you're a market maker, you bought calls, you've got to sell stock to hedge. If you weren't long the stock, you would have to sell it short. And back then they required you to have an uptick to sell it. Like the last tick, like, you know, if the stock was at, you know, 99.5, if it trades down to 99 3/8, like you couldn't sell it short because it'd have to go back up one uptick to 99.5. And so, you know, upticks were a thing. And so I just remember this one time, one of the guys in our pit, he got a new clerk and the market was getting kind of busy. And he's like, hey, and he like gets right in his clerk's face. He's like, hey, hurry up, go get me a box of upticks. And he's like, okay, where do I go? Just go on the other side of the floor. Go get me a box of upticks right now. And the clerk would like frantically run over to the other side of the floor and he'd be asking people, he's like, hey, do you know where the box of upticks is? And people would just laugh at him because, you know, they don't come in a box, you know.
I did see that once or twice of clerks running around frantically looking for it. That was a very common joke. I never experienced it myself. Luckily, I think I would have been savvy enough to put two and two together and realize they are not a physical entity. But you never know in that moment. But you bring up a good point, too. You had to sell short only on upticks. So you had the double whammy of usually you'd get hit on a 20 lot of 100 delta calls. And, of course, you're buying them right as the stock is plummeting. And if you were short stock in your position, you couldn't hedge it. So you're just riding the stock down even more. You couldn't sell your stock short to hedge it. So then you have to scramble for something in the book to sell against it. Usually it was garbage. Yeah, these were easy, fun ways to lose thousands of dollars at a clip, even when a usually quiet day, listeners. Kind of fun stuff. But all else is fun stuff, listeners. And you know what? We have many more stories. I think we'll have to have a volume 3 and perhaps a volume 4. Maybe you have questions about the trading floor you'd like us to answer. By all means, send those in. This is a fun topic. But let's get out of here this week, listeners, with a little bit of the old market taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Mr. Dan, you like that new tune, huh, sir?
Yeah, all right. I like it, man. We got the bass in there, you know, reminds me of my old days playing with the band.
No logins, but we'll deal. I think YouTube will like it more, sir. Mr. P, what you got in store for us this week?
All right. So I know on some of the past episodes, we talked about zero DTE trading, 0 day to expiration. And I mentioned that I was in the process of launching a scanner I've been working on for months. And so the question I got, did you launch your zero DTE scanner yet? And that answer is yes. We actually literally just launched it last night. And it's pretty exciting. We had a lot of people join us, sign up for the scanner. And we're going to keep offering it throughout the week. So if you're on our email list, make sure you get on that. If you're not, and get an invitation, just go to markettaker.com/party because it's our launch party. And during that presentation, which is coming up in about an hour or two, hour and a half, I'm going to tell you all about how the 0 Day Hero Scanner works and give you an opportunity to get it at a special discount.
So what's it doing? Is it scanning just straight long premium, short premium, spreads, all of the above? What's it scanning for?
No, man, it took a lot to put it together. It scans for outrights, long and short, verticals, call put, long, short, credit spreads, almost everything, really. It even scans for boxes.
Boxes.
I know.
I want to do a 0-day box. And then I know I've achieved apex options trading when I'm trading 0-day boxes.
Yeah.
Again, hit us again, sir. If folks want to check all that out for themselves, where should they go? How can they learn to trade a 0-day boxer?
Well, you can do that today. Go to markettaker.com/party. And I'll be talking to you in about an hour and a half or so all about it. We're actually going to do one more encore of it later this week. But today's the last day for the ultra super discount launch.
Ultra super discount. Check it out, markettaker.com. Don't forget the second T. And don't forget our friends over there at public.com. They just launched their options trading earlier this year. They're still rolling out iterations and improvements to it. That's why they're on a show like this. They want you to know about it, A. And also they want to hear from you folks. Kick the tires and light the fires. Tell them what you like. Tell them what you don't like. Most importantly, tell them you heard about them from us. They're already hearing great feedback. That's why they've already renewed for an extended period. They're liking you folks out there in the land of OBC. So go on over to public.com, easy to find, public.com. Tell them we sent you. And tell them what you think about their options platform, what they have, what you like, what you're using. And of course, check out that rebate. They're kind of leading with that these days. And it certainly is a compelling thing to check out at the very least. Public.com, the place to go to kick the tires and light the fires. Dan and I have to get on out of here, but luckily for you, if you're hanging out in the pro, we'll be back instantaneously. Otherwise, we'll see you back next week. Another episode of Options Bootcamp.
Check out public.com if you want to literally earn money to place options trades. There are no commissions or per contract fees. And Public gives you a rebate of up to 18 cents per contract traded. Discover why NerdWallet recently gave options trading on Public 5 out of 5 stars. And start paying less than $0 to trade options. Only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures and podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.